Hey, good morning, everyone. I don't see the camera here. Okay, that's fine for today, I guess. Um, Let me just find one thing started. Hope you're all doing well. It's now Tuesday, May 7th, and we've got this momentum to the upside going in the S&P and the overall markets and all this good stuff. And today we also have an Apple event, right? The event that everyone's been waiting for realistically, and that's something that we're going to be covering here. So I got Apple here on the screen. So the upside momentum in the overall market continues, and there is some decent upside pressure that's happening day in and day out from about last week. So when we look at this, um, the upside momentum that continued on last week. What's happened is we've gotten the acceptance in the distributions higher and higher, and a lot of people are trying to put this on, or maybe not a lot of people, but there's a decent perspective that Apple's actually helping this out from last Friday. Even though we got some downside press on the start of the week on Apple compared to the overall market, the S&P rallied fairly well. Apple yesterday was getting pushed back down, now trying to gap up while the overall market sustained some of its upside. So we're in a very very pivotal moment on the S&P and the overall market to see if we can get some kind of press to the upside momentum, and if we're going to go and trade into new highs before, or even if there is going to be a deeper pullback. So let's talk about Apple here. The second biggest U.S. company by market cap will be holding a different kind of Apple event today, which is somewhat unusual timing given that it's only 1 month before Apple's annual Worldwide Developers Conference, the WWDC, and Let Loose event. The Let Loose event to draft up something special for you. And there's already much speculation before the kickoff, which happens today at 10 a.m. Eastern, which can be seen on YouTube Live, Apple TV, podcasts, and so on. So the event is likely to center around iPads and related accessories, such as new generations of iPads, the iPad Pro with OLED display. More importantly, it will be the first device powered by the new M4 chip, making it the most powerful than the latest Mac and giving it the possibility of new AI capabilities. The biggest iPad Air on record might also be in store with a 12.9-inch version that could make for a good alternative to the Pro, albeit with less power. There's also talk of slimmer bezels and camera repositioning, as well as other new hardware that might finally see the light of day, like upgrades to the Magic Keyboard and Apple Pencil. So, revenue in the category has been stalling lately with no new iPad releases since 2022. That'll mean a lot is riding on the event, especially after some recent set of earnings that showed some sales weaknesses in several categories. However, Berkshire Hathaway's Warren Buffett is still calling for Apple to be his largest investment after the iPhone marker added a record $110 billion to its buyback program from its earnings, raised its quarterly dividend by 4% as well. So Apple is working on a chip design to run artificial intelligence software in data center servers, according to the Wall Street Journal. The project, which is internally codenamed Project ACDC, Apple Chips in Data Center, is being coordinated with partner Taiwan Semiconductor's Manufacturing, ticker symbol TSM, and could give the company a much needed edge in the AI race. The latest effort is aimed at running AI models rather than training them, and would build on other recent silicon success stories at Apple, like custom in-house chips made for its devices. So a lot of eyes are on Apple, especially after this most recent downside press. Realistically, we saw that this came out over last week, or sorry, the last year's downside press that has been coming up was really pushed away by this gap up on Apple based on earnings. But I still think that as we enter this 185, 184 area, Apple gets fairly overbought, which puts some kind of transitional pressure in tech, right? I think that tech is still kind of trying to find its footing over the last earnings period that may have not been as what was expected, but we're starting to see that things are starting to turn slightly. But the overall equity market isn't necessarily at that case, right? Another thing that I want to talk about before we start jumping into this equity market and what my potential outlook might be on this is going to be the Japanese yen and the JPY. So the Japanese government may have to intervene to support the yen in case of irregular speculation-driven forex movements, said the top currency official Masato Kanda. Many suspect Tokyo intervened last week twice, spending over 6 trillion Japanese yen, which is 58 billion US dollars, to support the currency. But the US expects these interventions to be rare and uh, consultation to take place. So Treasury Secretary Janet Yellen has declared this. The Bank of Japan is trying to avoid raising ultra low rates through currency intervention. So we've seen that there has been a lot of volatility, and the Japanese yen is still in very, very heavy weakness realistically. Right now, one US dollar costs about 154 Japanese yen, or it could buy, I should say, 154 Japanese yen, peaking at about 160. This is the highest level that I think I've honestly seen in this market. Not that I'm a big forex or currency guy, but if there's plans to travel to Japan, now could be the time, right? Based on this currency, it's really really exaggerated its movement and really weakened. So this Japanese intervention might be something of a very near future yet again. The speculations haven't yet been confirmed, but it's something to take a look at. And we'll talk about Boeing again, right? Yesterday we talked a little more about space and the movements around space travel. So Boeing can't seem to catch a break naturally. Its first crewed Starliner mission launch was delayed once again because of a faulty oxygen relief valve on the Atlas V rocket, with plans to reattempt the launch on Friday. We are just not willing to take any chances with what is our most precious payload, said Dylan Rice, engineer at the United Launch Alliance, which is owned by Boeing and Lockheed Martin. The Starliner mission has been on hold for years, plagued by issues ranging from software coding to stuck valves. Meanwhile, Boeing is facing another regulatory probe, this time into its 787 Dreamliner inspections. So it hasn't gapped down necessarily too much behind that news, but Boeing's been being beat up alongside, which is terrible news that sticks around it day in and day out, it would seem. So we've got a Fed speaker coming out today after the Aapl meeting, so the morning should be fairly eventful. We have Kashkari on the wire, 11:30 a.m. Eastern time. In terms of the equity markets here, we can take a look at the S&P 500 futures naturally, as we're continuously trying to climb higher now. So we take a look at the overall what's it called, the value the volume profile distributions here and how we've been climbing higher and higher. Right now we're above that 51.95 area. We're trading into 52.14. We're trying to run continuously higher. The bottom of the distribution is 51.95 region. As long as we're above that, honestly, there's still upside pressure where buyers are trying to position themselves from 52.08 to 10, which could help themselves push up into 52.20. We start moving above 52.30, you accept into another area where I'm going to be targeting that 52.45. So honestly, unless we can break under like 52.05, 51.95, realistically, it's going to be very hard to be short this market, and what shorts would want to do into these highs would be realistically fade. And that's something that, yeah, you could probably get away with maybe if you continuously try it, but there has to be something big that really sticks out to tell us, okay, the fade is on, the downside press is on, the turning point's on, and generally speaking, a lot of that comes from market transitions, which happen into acceptances of distributions at lower prices. So that's not necessarily what I'm seeing right now in the overnight session. They're still sustaining this upside momentum, and realistically, it becomes a little more difficult to be short unless we are below 52.05 / 51.95 realistically. So that's what I'm going to stay along with. Yesterday I looked for too many shorts, I think, especially into that like 51 mid 80 area, which held for a bit but didn't really do much follow through as we continue to accept into distributions higher. So unless we fail to accept into a distribution continuously, I don't necessarily want to touch this. So if it's Boeing, we ain't going. That's fair. I should pay attention more so to planes that I get on, but realistically, I don't think many of them are Boeing. They might be even worse. So, good morning, Evan. Good morning, Laurent. Hope you're all doing well. And that's how I'm going to start off the day on the S&P 500 futures today, honestly. If we can't make a move below like 52.05, I think it's going to be very hard for me to stay on the short side today as we continue to accept distributions higher and higher. On the day trade perspective, I've been looking to um, find some shorts as I'm closing out some longs on options that we had over the last 2 weeks. Now is the chance I can see, but trying to short this continuously, even though I think that there is a lower high shaping up, many gaps to the upside the last few days. If you can change the structure and you can accept on a distribution lower, you don't necessarily have too much momentum to the downside in this market, and trying to fade this can be kind of cataclysmic, right? Unless you trade some key levels, but I'm just going to leave that out and try to trade what we have in front of us. So let's open up our live trading room. I'll see you all in there. We'll take note of all these things and let's see what we get on today's session. Even though I think there could be a higher low, realistically, it's not going to happen above 52.05 with higher probability. Obviously, it can happen above 52.05. But realistically, I want it below that 52.05 if I'm going to increase the probability of me being correct on this potential failure to make a new high.